Welcome to AHA Math and Science. For today's video is a weekly summary for the stock market in the past week. But before the summary, let's just take a quick look at what's to come in the following week, in the week of May 1st. Actually, it's going to be a very important week. So there's a bunch of important events that will take place. So on Monday, the manufacturing PMI will be released, and that will be the PMI for the month of April. We note that this manufacturing PMI has been in contraction for the past 7 months. In fact, it has dropped kind of very sharply. It can be a leading indicator to tell us whether when the recession will come, and so it's definitely worth watching. And then on Tuesday and Wednesday, we have this important meeting, FOMC meeting. So the Federal Reserve will announce the decision on Wednesday. So this is definitely a big market moving event. A lot of people are kind of betting on the Federal Reserve may pivot, but the exact language is actually worth definitely watching. And then on Thursday, a very important earning announcement from Apple. Apple is one of the heavyweight in both the SP 500 and also the Nasdaq. So after market close on Thursday, Apple is going to announce its latest earning results. Definitely worth watching. And then on Friday, we have actually a very important report. That's basically the employment report for the month of April, and we can we'll have a look at the latest unemployment rate and other important information related to the labor market. And that's a lagging indicator, but it will be kind of worth take a look and to see that what's really going on in the labor market. And it will also give us some information about the incoming recession. So again, a very important event to kind of keep an eye on. So now let's take a look at the market. What did the market do in the past week? Well, let's first take a look at the week before. So that week of for the week of April 22nd, for the week that ended on April 22nd, you can see that for all the index pretty much did not really move much. Though that we noted that the SP 500 and the Nasdaq were in the red. The last 2,000 was in the green. And then for this past week, we can see that the SP 500 and Nasdaq and Russell both kind of all three indices were in the green on Friday. And for the week, though that actually it's interesting, the SP 500 and Nasdaq were in the green, but the last 2,000 was in the red. And actually this dropped like 1.26%. The Nasdaq is risen for like 1.28%. So there's a divergence here. And then the VIX was actually in big red for the whole week. For the whole week, it dropped by 5.9%. And now it was kind of the lowest close since October 2021. This is something definitely kind of worth taking a look. We will discuss that just in a little bit. But first, take a look at the divergence between the Nasdaq and Russell 2000. We noted in previous videos that we already kind of spotted this divergence between QQQ and the IWM. We noticed that this is a chart for the week ended on April 22nd. So that was the past week. You can see the divergence. QQQ was making new highs. IWM was in this downtrend. We noted that when this happens, usually, just like, for example, at the beginning of the bear market, when you have this huge divergence, usually such divergence get resolved by eventually two indices both moving in the same directions. Either they both kind of break down, make new lows, or both make new highs. And in a bear market, obviously, it's going to be both it's going to make new lows. Now, 1 week later, this is for the week just ended on April 29. You can see what happened. Actually, the divergence just get worse. QQQ continue to make highs. In fact, now QQ was kind of has the highest close since October 2022, but IWM was still in this downward trend, and the divergence just gets bigger. It's not resolved. So this is definitely a worrisome sign, and in a bear market, as we noted, that usually get resolved by eventually the strong index is also going to make new lows. Now, in fact, when you take a look at the QQ using the trend analysis by plotting the QQQ on the log scale and fit the data using regression analysis, we find that it was clearly in a downward trend since October 2021. And then here you have these two pink lines, which are 2 sigma above and 2 sigma below this trend line. And when they're below, you can see it did not stay too long. It would just quickly rebound and revert to the mean. No, they just in the past 2 days, no, they are above the 2 sigma trend line. So what does that mean? If the downward trend line is intact, for it to be intact, it has to revert to the mean. In other words, we think it's not going to stay too long here. You know, in a short period of time, maybe a few days, it's going to revert to the mean, and that's going to make the downward trend, you know, intact. Now we also pointed out that the VIX was making new lows. In fact, now it was closed on Friday. It was closed at 15.78, which is now much lower than the January 3rd close of 16.60. That's the January 3rd, 2022 close. So this is now kind of the 15.78 is now really kind of getting close to the low it made on October in October, that it made a new low, which is 15.01. Now it's kind of get close to it. So I guess like if you kind of thinking about the market to be bullish, then you might think like, yes, in the short term, probably there's a few, you know, there may be kind of indicate more upside room for some of the major indices. But on the contrarian side, you could also take this as a signal that the market is being too complacent. So that usually means that it will not be too long for the VIX to kind of reverse its trend and start kind of go up. So it's actually not uncommon at all when the VIX get very close to some very multi-year low and then eventually kind of revert it. So this is something to watching for. And now when you do the trend analysis for the SPY, which is the ETF for the SP 500, you can see that it's clearly it was in a downward trend since October 2021. And when actually go below it, it does not take too long for it to kind of rebound and revert to the mean. Now it's actually kind of getting close to the 2 sigma trend line. So, you know, whether it's going to actually start kind of going down or it's actually kind of go up a little bit more and go above the 2 sigma trend line, that's hard to tell, because in the trend line analysis, either way is fine. Either way is possible. So here you can see that it did not even get too close. It's kind of already come down. It's only kind of get above the 1 sigma trend line and it's coming down. So this is all kind of see like above the 1 sigma coming down, but now it's getting too close to 2 sigma. We'll see. In either case, whether it's gonna just kind of coming back down before touching, or it could be kind of, you know, go above the 2 sigma trend line. But once actually it's turned around, usually it's gonna revert to the mean, and it's gonna be basically going to be, you know, stay in the trend for quite some time. So that's the SPY. And then the next signal, which I pointed out 2 days ago, is about the Dow Jones Transportation average. This is a very important indicator. The transportation average is really kind of about the fundamentals. So, you know, the delivery companies, the transportation companies, if they make a few deliveries, you know, few transportations, that usually means the economy is in trouble. So what we see that on Wednesday is a very disturbing signal. So you can see on Wednesday, the transportation average actually broke down and it closed, made a new low that is a lower than the previous low that made in March. So that's not a good signal. Although that it rebounded sharply, so it almost kind of regained more than 50% of the ground it lost in these 2 leg bar. But even that, you know, even this kind of pattern, coupled with the fact that when the transportation average made a lower low, but all the other major indices, including the very weak Russell 2000, still did not make was still higher than the previous low in March. So Dow Jones is also above the previous low. Nasdaq is very strong above the March low. But this kind of divergence does not bode well for the broad market. In fact, such divergence is not very often in the stock market. It's a very rare event, and when that happens, usually it does not look good for the broad market. So for example, on April 8, 2022, when the transportation average made a low, a close that is lower than the previous low, you can see what happens. Well, it actually kind of sharply rebounded. It almost kind of regained 50% of the ground it lost it in this couple red bars. Even actually, if you just look at these two red bars, you can see it almost regained all the ground lost in these two red bars. But eventually, not only the transportation average with the new lows, and it dragged down all the major indices, every index. The blue one is the SP 500. The pink one is the Dow Jones Industry Average. And the yellow one is the Russell 2000. And the purple one is the Nasdaq Composite. They all made the low. So this is something watching for. And then in another case, you can see it also happened on December 18th, 2015, when here, just transportation average made a lower low, which is a close that is lower than the previous low here. And while all the major indices are still above the previous low, which is here, right? See the purple, which is the Nasdaq Composite, well above this low that it was made in September. But then what happened? Well, just in the next couple of days, you can see that the transportation average did kind of regain almost like 70% of the ground it lost in these two red bars. But afterwards, it just had a sharp drop, precipitous drop. And then all the major indices also all made a lower low. So this is definitely something we need to pay attention to see how the market will unfold in the next couple of days. And then the last signal we're going to take a look is the dollar index. We've been mentioning this several times. That is, whenever the dollar index is weak, going down, the SP 500 is going up. And then when the dollar index is going up, and then the SP 500 is going down. They're kind of in this opposite trends. And now very recently, you can see since April, SP 500 is kind of making high. So at the same time, you can see that what happens to the dollar index, it's actually making high lows. So therefore, it seems like they're both kind of moving up. And you can see the dollar index, which is kind of unusual. It's another divergence. Usually indicates kind of trend of the change of the trend. So here you can see that when the dollar index is start kind of make these high lows, the MACD histogram is also started turning positive, which is shown here. And usually when this happens, you can see it happens here. And that's correspond to the top of the SP 500. And it also happened here, which is the MACD histogram signal started kind of turn positive. It also corresponds to a local high for the SP 500. So this dollar index is really worth watching. If it actually start to kind of keep moving high, even made a close that higher than the previous high, then it's going to make a highs, and that's going to be really an indication that the trend is already changed. So that's another signal we need to keep an eye on. So in summary, for this past week, you can see a lot of signals suggest that we kind of at a turning point, and this coupled with actually a lot of major events that will be happening next week in the week of May 1st. So this really kind of indicate to me that something is about to change. So so the next week is going to be really critical. It's definitely worth kind of keeping an eye on all these major events. So I hope you have enjoyed this video and found the information present here interesting. And really, I appreciate all the support you have given to this channel. So please do not forget to click the like button and also to subscribe to our channel. And thank you for watching.